Hi, everybody. Scott Riley, the Market Update Desk. It is Friday, finally Friday, August 14th. The Market Update Desk, NMLS number 157524 with Mortgage One. Well, this was a very exciting day in history. You ask why. In 2012, this is the day that senior analyst Mr. Gibson picked us out to be his humans. We are thinking of him today. He passed away about a year and a quarter ago, but came up on our Facebook memories as this is the day he picked us out for his humans, as they say. Last night, the Tigers won, got themselves into sole place of the third wild card position, and they are now one game away from being 500. So going into data from yesterday and today, let's run into that here. So yesterday we saw wholesale inflation, the PPI, producer price index, that came in a very cool, tame um, number as far as the headline. The headline came in at flat 0%, significantly better than the estimates that the market had put on the streets of a rise of 0.2% year over year. So month over month, I'm sorry, year over year headline PPI fell all the way from 5.5 to 4.7%. 0.8. That's a big number. The original estimates were for it to be at 4.9, so we're much better than what we planned on. Now, significant part of what helped the number was a 5.7% drop in gasoline. The core rate, now that's what strips out the volatile food and energy, gives us maybe a little true better read on it, rose by 0.2%. That was 1/10 lighter than what the market was planning on. Year over year, core fell from 4.7 to 4.2. That's a half point drop. It's a big number. The tame numbers came in despite the volatile, kind of untrue inflation data point, which is portfolio management. Now, starting next month, that's going to be addressed within the CPI and PPI numbers. So that could result in a net about 0.2 move downward when we get numbers next month. Bottom line, it was another really good inflation report for July. Now, after the BLS reported job losses and these cool CPI and PPI numbers, those hawkish Fed members are going to need to start to change their tune. And they have been putting out a narrative that they are changing a little bit. So what that did is it's dropping the Fed futures pricing for a rate hike in September to only a 32% chance. Now that's gone down from where it was at about a 55% chance about 3 weeks ago. Initial jobless claims, that's the job numbers that we get for the week. Initial claims they rose 9,000 to 209,000. Figure remains to be really muted and underscores how low the higher to low fire labor component is within the data metrics for employment. Continuing claims fell 22,000 to 1.78 million. That's a very cool number. Retail sales, kind of a swing and miss here. That fell 0.6% in July, weaker than the market expected of a 1/10 gain. Now, gas prices can be a big impact to this number. Even if consumers purchase the same amount of gas from one month to the next, changes in prices affect total sales because the data measures dollars that we spent, not necessarily percentage. To get past this, we look at the measurement like retail sales minus X auto and gas. So that takes out some of those variables that probably shouldn't be there. That figure came in at up 0.2 last month. Now, it's weaker than the half point that the market had been expecting, showing that there is a weakness on the consumer end that could be at a turning point. In fact, online sales fell 2.2% last month. Some of that can be attributed to Amazon Prime Day because that normally takes place in July, but that was June. So the data seasonally probably needs to be adjusted because that came in 1 month versus the normal month. Now, again, pointing to consumers that could be giving us signs of that they're being tapped out, that they're at their tipping point. These are metrics that we want to continually look at and focus on. Because when consumers are spending less on gas, at least in this report, more of the purchases have been on programs like buy now, pay later. which are where they can get the product or service right now, but they're going to pay for it over time. Is that propping up retail sales even more than expected? So we're going to watch this BNPL factor very closely. Now, today we're seeing in the market, Dow down 84, 10-year treasury up 3.5 basis points to 467, and oil is up just a small amount to 81.62 as we're looking at it. Friday has always kind of been a volatile day the last 3 months or so. So we're watching things quickly. A lot can change geopolitically, which could affect things over the weekend. We stay on top of those for our customers. In fact, we've got a couple customers looking to put in offers now. So we're going to keep track of the market over the weekend to help advise if they should lock or float into next week. Give us a call. Scott Riley, the Market Update Desk, your original singular market news source for West Michigan, 616-293-2189.